Hey there, Iguana Nation. Iggy here, your favorite investing reptile, and do I have a juicy stock pick for you today? In this video, we'll be diving deep into Uni-Asia Group, a hidden gem that's been flying under the radar. I'll break down why the analysts at SAC Capital have slapped a big, fat buy rating on this bad boy, with a target price of $1.02. We'll explore the reasons behind this bullish call and why Uni-Asia might just be the ultimate diversification play for your portfolio. So, grab your notepads and let's get ready to uncover the secrets of this potential multi-bagger. First off, let's address the most striking aspect of Uni-Asia's current situation, its heavily discounted share price. As of now, the company's shares are trading at an astonishing 60% below its net asset value, NAV. What does this mean, exactly? Well, imagine you could buy all of Uni-Asia's assets, their ships, properties, and everything else they own at their current market prices. If you did that and then sold all those assets, you'd end up with a lot more cash than what the entire company is currently worth on the stock market. It's like stumbling upon a hidden treasure chest filled with valuable goodies, but the market hasn't caught on to its true worth yet. This massive discount suggests that investors are either unaware of Uni-Asia's intrinsic value or are overly pessimistic about its future prospects. However, as we'll explore later, this discrepancy could present a unique opportunity for savvy investors who are willing to dig deeper and bet on the company's long-term potential. But why is the market undervaluing Uni-Asia so much? Well, there are a couple of reasons. Firstly, the shipping industry is facing some rough waters right now. Charter rates, which is basically the rent that Uni-Asia charges for its ships, are expected to remain low for the rest of 2023. It's like trying to rent out a beach house during a hurricane season, not the best time to make big bucks. You see, when the global economy is struggling, there's less demand for shipping goods around the world. This means that shipping companies like Uni-Asia have a harder time finding customers willing to pay top dollar for their services. As a result, they often have to lower their charter rates just to keep their ships out on the water and generating some revenue. It's a tough situation, but it's not uncommon in the cyclical world of shipping. The good news is that these downturns don't last forever, and when the economy eventually picks back up, so too should the charter rates and Uni-Asia's bottom line. Now, let's talk about Uni-Asia's property investments in Hong Kong. As some of you might know, the Hong Kong property market has been going through a rough patch lately. It's like trying to sell ice cream in the middle of winter, not exactly the easiest thing to do. In fact, Uni-Asia's management has already said that they don't expect any contributions from their Hong Kong property projects in the second half of 2023 and the first half of 2024. That's quite a long time to wait for those properties to start generating some cash flow. But here's the thing, while the Hong Kong market might be struggling right now, Uni-Asia is actually looking to expand its property investments in other parts of Asia, particularly in Japan. They recently made their first successful co-purchase of land outside of Tokyo, and they're considering similar acquisitions in places like Furano and Niseko. These are popular tourist destinations known for their stunning natural beauty and ski resorts, so there could be some real potential there for Uni-Asia to tap into the tourism market. Of course, investing in property is always a bit of a gamble, and there are no guarantees that these new investments will pay off. But it's encouraging to see that Uni-Asia is diversifying its property portfolio and not putting all its eggs in the Hong Kong basket. By spreading their investments across different markets and regions, they could be better positioned to weather any future storms in the property sector. But here's the thing, despite these short-term challenges, the analysts at SAC Capital still think Uni-Asia is a buy. Why? Because they believe the current discount is just too big to ignore, especially considering the high quality of Uni-Asia's assets. These assets include a diverse fleet of dry bulk ships, property investments in Hong Kong and Japan, and a growing asset management business. The company's ships are relatively young, with an average age of around 10 years, which means they have plenty of operational life left. And while the Hong Kong property market may be sluggish right now, Uni-Asia's projects are in prime locations and could see significant upside when the market eventually recovers. Think of it like this, imagine you're at a garage sale and you spot a brand new iPhone selling for half its retail price. Sure, it might have a few scratches here and there, but it's still a great deal. That's kind of like what's happening with Uni-Asia right now. The market is pricing the company as if its assets are worth far less than they actually are. But savvy investors know that sometimes the best opportunities arise when others are running for the hills. Plus, the company is also looking to expand its property investments in Japan, which could be a nice boost to its bottom line in the future. Uni-Asia recently made its first successful co-purchase of land outside Tokyo, and management sees potential for similar deals in other popular tourist destinations like Furano and Niseko. By partnering with other investors, Uni-Asia can spread its risk and tap into new growth markets. This kind of strategic thinking is exactly what you want to see from a company that's navigating tough times. So, what's the bottom line? Well, let me break it down for you. Uni-Asia is like a ship sailing through some rough waters right now. The shipping industry is facing some challenges, and the Hong Kong property market isn't exactly booming. It's like trying to grow a garden in the middle of a drought. It's tough, but not impossible. But here's the thing, Uni-Asia has some solid fundamentals that could help it weather the storm. It's got a diverse business model, with investments in shipping, property, and even some hospitality assets. That's like having a few different crops in your garden. If one doesn't do so well, you've still got the others to fall back on. Plus, Uni-Asia is trading at a massive discount to its net asset value. That means if you were to buy all of Uni-Asia's assets and sell them at market prices, you'd get way more money than what the company is currently valued at in the stock market. It's like finding a diamond in the rough. Sure, it might need a bit of polishing, but the potential is there. Now, I'm not saying Uni-Asia is a sure thing. Like any investment, there are always risks involved. The shipping industry could continue to face headwinds, and the Hong Kong property market could take longer to recover than expected. It's like planting a seed. There's no guarantee it will grow into a big, strong tree. But if you're a patient investor with a long-term horizon, Uni-Asia could be worth a closer look. It's got a solid foundation, a diverse business model, and a management team that's been navigating tough markets for years. Plus, with that massive discount to net asset value, there's potential for significant upside if the market starts to recognize Uni-Asia's true value. Of course, as with any investment, it's important to do your own research and make sure Uni-Asia fits with your overall investment strategy and risk tolerance. But if you're willing to weather the short-term storms and hold on for the long haul, Uni-Asia could be a hidden gem that helps you set sail towards your financial goals. Alright, Iguana Nation, that's a wrap on our deep dive into Uni-Asia Group. We've seen how this company is trading at a massive discount to its net asset value, despite having some high-quality assets up its sleeve. While there are some short-term headwinds in the shipping and Hong Kong property markets, the long-term potential is still looking pretty darn attractive. As always, remember to do your own research and never invest more than you can afford to lose. If you found this video helpful, be sure to smash that like button and subscribe to the Investing Iguana channel for more juicy stock picks and financial wisdom. Until next time, stay hungry for knowledge and keep on investing.